With uncertainty continuing to develop around future interest rate reductions, the risk asset market has had a hard time getting ahead over the last few weeks. In today's video, we are discussing the recent correction for Bitcoin, going over the key levels, what this correction means for the broader markets and altcoins, what will happen if Bitcoin drops below 92.5k, and how Bitcoin could push toward the upside. These are questions we're answering. Let's jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. Bitcoin has seen the worst case scenario play out, with deviation from the $100,000 breakout resulting in a cataclysmic correction towards the range low of the horizontal level at 92k. This was a scenario we discussed in our prior video, discussing where if Bitcoin was unable to find support upon retesting 100,000, we could see a full-blown retracement back to that 92k level, and we have since seen that play out. In today's video, we are going to be discussing what happens now. How are the charts looking? Where is Bitcoin likely to go? How is the altcoin market cap looking? And so much more. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us over on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us over on VIP. You can find out more information about our VIP channel in the pinned comment of the free channel, clicking the first link to see a 50+ month trading track record, and the second link to show you inside the channel in a 10-minute exclusive video. We have over 700 members and post trading setups with the exact entries, targets, and stop losses, including access to a multitude of group chats, from the general chat to the trading chart and education chat to the daily video help and news chat. Check that out, guys. Join up, click the links to find out more, and let's dive on into the content. So as we can see, Bitcoin has had a crazy 24 hours, followed by what was considered a very strong breakout with a break of the prior low, a break of the RSI, and of course the price action breaking from that critical 100 psychological level. Since then, however, upon the retest of that horizontal level at 100,000, Bitcoin was unable to sustain a support, and thus we saw a cataclysmic correction back to 92,000 as we depicted in our prior video. We mentioned in our prior video, for Bitcoin to continue toward the upside, the most important level we had to break above was going to be that $102,000 level. We suggested that if we were unable to break from this level, we could see a retest of 100. So overall, the price action has acted in a reasonably assumed manner. It has acted in a manner that isn't too, I would say, outlandish, but it was literally the worst case scenario that did play out. This was a scenario that was a very low probability scenario, and a scenario that, although we were prepared and planned for, wasn't ideal for the broader market. So we're going to discuss why it's not ideal and what this can mean for altcoins in just a moment. So we'll move over to the broader markets very quickly, starting on the liquidation and volume. Liquidation and volume up a fair bit, with volume sitting around 0.3%, 270 billion. Liquidations pushing 500 million. The majority is coming from long positions. Looking at the DXY, the DXY has continued to climb upwards very slightly upon the release of the FOMC minute meeting. The minute meeting overall had slightly a bearish tone, and that is kind of in par with what that September meeting was, which was essentially an announcement they were looking to drop interest rate reductions from 4 to 2 in 2025, followed by the meeting at the end of last year in December, sticking hard to that narrative. And we can see now that the market is much more risk off as the S&P 500 is falling down, as Bitcoin is correcting with traditional assets. And of course, we can still see the Federal Reserve really pushing that they are very adamant at bringing inflation inflation down, and that is kind of contradictory to some extent with reducing interest rates. As we know, if we look at the interest rate curve over here, and we'll go ahead and bring this up in a second, if we look at the flow chart between interest rates, inflation, and risk asset performance, we're looking at these charts over here, right? We can see that by nature, dropping interest rates will eventually result in inflation rising. So you can see how they're kind of prioritizing bringing down inflation rather than bringing those interest rates down and pushing the markets up. And you can see how that narrative they're starting to develop is not really having a very good, I guess, reception in the traditional asset market and in the risk asset market, as traders are now again becoming more risk off as perceived systematic risk increases as the potential future interest rate reductions in terms of quantity start to decrease. This uncertainty that they've started to push in December, the reason why, one of the main reasons why I exited all assets and moved into cash, is still present and is still looming and is still a major risk factor that the market is very much aware of. Looking at the S&P 500, we can see it's still correcting toward the downside. We are standing by our stance. We are bearish on the S&P 500 on the short term, provided we remain underneath that 6,100 resistance. We are expecting corrections to 5,700. If we reach 5,700, this is going to be a major reversal point. But if we lose 5,700, it is very likely we enter a higher time frame correction. So short term, bearish, high time frame, cautiously optimistic to optimistic. But for us to see that immediate reversal toward the upside, we need to break through that 6,100 level. So as we mentioned, we're going to be taking a look at Bitcoin, going over the short term, discussing what needs to happen for a reversal and what that reversal may look like. We're going to be taking a look at the higher time frame charts, discussing the key levels and the implications of this move and implications of a further correction. You know, what impact could that have on the market? We're taking a look at the total market cap and the altcoin market. So before we get into it, take a few moments, sign up to BitGet, BitUnix, or BingX with the links down below. These are the exchange links. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content and you'll support yourself. Check it out and we'll jump back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. We're going to keep today's video short and sharp and just smash out the key pieces of information. First and foremost, Bitcoin has retested a critical level of support. This is the $92,000 level. As we can see, 92,000 has been retested now numerous times, with our first retest on the 25th of November, followed by a retest on early December, late December, twice, again at the end and start of 2025, and once more on the 8th of January. So we're looking at around 5 to 6 retests here over the course of a 4-week period. This level is a critical level of support, just as if we're looking at the total market cap and the total 3 market cap, it lines up with some major levels of both technical and structural support on both of these charts. If we're looking at the total 3 market cap, which is the altcoin market, it lines up very well with the 50 EMA. And if we're looking at the total market cap over here, it lines up relatively well with the recent low prior to the breakout of that, or should I say after the breakout of that 2021 high point. So we know that the loss of 92.5k could act as a bearish trigger point. Furthermore, if we take a look at the VRPV, we can see that again, a loss of 92,000 results in the price action entering this low historical resistance range, which could exacerbate the downtrend could result in a continuation toward the downside. So we absolutely need to sustain above 92.5k if we want to see any hopes of a reversal on the short term. Upon the breakdown and loss of this level, that is when we open up the potential for an extended correction into the mid to low 80,000, potentially even into the $70,000 region. Essentially, if we zoom out again and just look at this channel, this consolidation range, we are deeming this as deviation, and therefore we are looking at the trigger points to be, yet again, the same trigger points prior to this breakout. For Bitcoin to continue upwards on the higher time frame, we need to break now above the prior deviation high, which is at 102.5k level. Above here, we'll have strong confirmation for new highs, and for Bitcoin to continue lower, we need to lose that 92.5k major support, which again will result in continuations toward the downside. Until then, we are still in this chop zone, this consolidation range, this range of indecision, this range of uncertainty, and this is a very, very tricky range to be in, as again, we are getting mixed signals economically from FOMC, of course, from Jerome Powell, from the Federal Reserve. We're getting signals on the charts over here, suggestive of prior repeats of historical fractals. It is a very tricky zone. So the best thing to do is to watch these trigger points and act simply from supply and demand. At the moment, support is support until it is considered not. If we break down from the support, we have to trust the breakdown will sustain, just as when we break up from a resistance and we have the validations, you have to trust those breakouts will sustain until they are proven otherwise. Let's move over to the implications this move has had on the higher time frame and potential implications it could have if we see the price action go lower. So first and foremost, implications this move has had on the higher time frame is basically none. This is just a move to the range low. It hasn't really impacted the macro charts in any real major regard. If we're taking a look at Bitcoin again, for us to see any sort of macro continuation downwards, that 92k level needs to break, and that has remained the fact for the last few weeks. It doesn't matter if we go up over here, it is still going to be that 92k support that we need to break toward the downside to see continuations lower. It doesn't really matter what happens above there. If we're looking at the total market cap, for example, the total 3 market cap, upon the breakdown of 92,000, it is highly likely that the total 3 market cap will break and close below the 50 EMA. Now, the reason the 50 EMA is so important is because if we look at our prior cycle, our prior altcoin season, we remained more or less above the 50 EMA the entire time during the quote-unquote altcoin season of the prior cycle. If we look at the altcoin season in the prior cycle, moving to a weekly chart, we can see the altcoin season triggered upon the breakout of that yearly resistance. At the time of which that happened, we saw Bitcoin dominance begin to fall, and we saw Bitcoin create that local top. So we can see that we are sitting above that region now. Now, if we go back to the daily chart, ever since we broke above that yearly resistance and entered the quote-unquote altcoin season, we have been sitting above the 50 EMA. So again, we go back to the prior cycle, we were sitting above the 50 EMA ever since we broke out of that horizontal level the entire way up. Until then, we saw a major 50% altcoin correction when we lost it. So we need to see the altcoin market sustain above the 50 EMA. And while the 50 EMA is holding as support, there is a possibility that we will see continuations in the near term. Now, the possibility we do see those continuations will be massively diminished if Bitcoin does lose 92k, because a loss of 92k will result in that 50 EMA being broken. Moving over to the total market cap, if we're looking at cryptocurrency as a whole, and I'll say this, and I've been saying this for a few weeks now, cryptocurrency as a whole on the macro scale still has a relatively bullish outlook. The reason being is because we are following that 2021 cycle to the T almost in regards to our timing, okay, in regards to the structure and how the price action has been responding to our critical macro levels of interest. In this instance, we can see we have seen a similar break of that prior 2021 high as we have now seen in 2024. We saw a break up, a massive 30-40% rally, followed by a steep correction to almost come back down and retest that prior all-time high. We have seen a very similar scenario. So provided the total market cap does not drop drop back below the 2021 high, this is not deviation. This is assumed to be a breakout, and we could still see continuations upwards. Now, the economic uncertainty is playing a massive factor in, again, the uncertainty and indecision really on the Bitcoin price action and for the total market cap. As we generally see uncertainty develop in the markets, the most speculative parts of those markets begin to fall, hence why we have seen Bitcoin dominance rise and altcoins get absolutely hammered. So all of this, of course, could potentially change if we do see the Federal Reserve move towards a more bullish outlook with more than 2 interest rate reductions. It is highly likely the perceived systematic risk will decrease and the markets will continue toward the upside aggressively. But until we move into the next interest rate decision, until we get more information surrounding that uncertainty, it is likely we continue to see this aggressive chop and this uncertainty represented in the price action itself. The key levels I really want you to be watching is, of course, 92,000. And now that 102,000. The easy way to look at it is below here is going to be bearish, above here is going to be bullish. That is how we're looking at it. That is how we're playing. Between these ranges, we are still sitting primarily in cash. As you know, if you've been following the channel, I bought Bitcoin at 16.5K. I sold it at 32,000. I bought back at 26. I held all the way to 96,000 and I sold at 96,000, re-entering at 102,000 and then selling once more 106. And since 106, I have been entirely and utterly out of all spot positions, sitting in cash and just trading. And I'll continue to do that until we see a little bit more certainty surrounding these economic developments, particularly around interest rates. As we know, policy stipulates demand and policy drives prices. If there's uncertainty around economic policy, there is going to be uncertainty in the asset market, as the asset market is a representation, or should I say, a reflection of people's emotions and thoughts surrounding potential future policy changes or potential future events. Remember, the market is future seeing. It moves on perceived systematic risk, perceived being implied of what something could be in a future period. So we need to keep our eye on those developing changes, as they could change for the worse, but they also could change for the better. Nothing is set in stone yet, and hence why the market is very shaky and unstable right now. Let's move over to the short term. For us to see continuations upwards, and I'm just going to go ahead and show you, just like on a 5-minute chart over here. We can see, guys, we have this pretty strong downtrend developing. We have this downtrend. We have now got 3 retests, 1 retest, 2 retest, 3 retest, and this has developed into that 92.5K low, represented by the horizontal level. So Bitcoin is definitely trying to see reversals over here. We can see through most of this downward move, momentum has more or less been increasing. So we can see the buyers are trying to get back in control, but there is just a significant amount of selling going on still, and we do need to see this trend break. So when this trend breaks, it is likely then we will see continuations. We are watching his prior liquidity levels, 96,000, 97,000, 98,000 POC. But again, even if we start to see this move, we really need to push back above 100,000, 102.5K to be confident. And with that, we need confirmation from a policy perspective to, tell us that the macro is still going to be bullish, because until we get that policy shift, it is unlikely we're going to see any sort of definitive continuation in either direction until they kind of get off the fence with what they're kind of doing. So that is it, guys. On the short term, I'd be, again, cautiously optimistic. There are a lot of altcoins retesting critical supports, with the total 3 market cap retesting the 50 EMA. It could be a pretty good time to take some high risk longs, again, depending on the coin, with tight invalidations, as again, a loss of the 50 EMA has historically signified a breakdown for altcoins to result in a macro continuation downwards. But until then, again, we are watching these key levels. Thanks for tuning in. Have a fantastic day. Catch you in the next one tomorrow. See you then.